Good morning, everybody. This is Laura Petersen. I'm your host of Central Florida Real Estate Radio. I'm from Your Home Sold, Guaranteed Realty, and to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So lots of great stuff to go over with you guys today, obviously, and that's why I'm here. But I always start out with the stats, and I did kind of change up the stats a little bit that we're looking at we're switching out a couple of counties. So we were looking at Orange, Osceola, Seminole, Lake, and Volusia, but now we're going to be looking at Orange, Osceola, Polk, Seminole, and Lake. So basically taking out Volusia, putting in Polk. And obviously the unique thing there is that there are a lot more houses selling in Polk than there are in Volusia. Now, Polk County is one of the biggest counties in Florida and all of that. And the challenge with that is with either Volusia or with Polk is that they're not completely here in what I would call is the greater Orlando metropolitan area, but parts of Volusia and parts of Polk are included in that area. So it's kind of interesting in regards to how we look at it. Now, I will be going through, like what the price is on average for the different counties, just overall for the most part, because I think that kind of gives you a perspective. But just wanted to let you know. And if you have feedback on that, please let me know in regards to what you're looking for, or if this is just an overall kind of a deal that, helps you out and all of that kind of good stuff. So single family residences, the median price went from $400,000 to $397,000. Now, Polk County actually had a whole lot of sales, like in the neighborhood of 300. If you looked at Orange and if you put Volusia in there and didn't have Polk in there, there were 337 houses that were sold, but there were 621 when you take out Volusia and you put in Polk. So Polk houses that are selling are obviously almost double of what all of the other, counties combined is at this point in time. So it really is an important number to look at. But it does count all the way, it does include Lakeland and all of that kind of stuff, which, like I said, is not necessarily completely in our area. So the number of 397 that's under 400, you might be saying, well, we haven't ever been below 400, but that's exactly the reason why that we are there. Because when you look at the median price of Orange County, it's at $547. When you look at then at Seminole, it is $515, and then it's $403 for Osceola. It's $365 for Lake, and it was $352 for Volusia. And so basically when it comes down to it, I'm always talking about everything is very local. And so you definitely need to know that. The condos and townhouses, the median price went from $279.5 to $280. So having Polk and everything in that does not necessarily make a difference. The sales went from $134 to $139. So that's really similar to what we've been going through before. Now, of those single family homes that sold, of those 615, 47 of them were under 250, 68 between 250 and 300, 200 between 300 and 400, 98 between 400 and 500, 173 between 500 and a million, and 29 of them were over a million. And so basically when you're looking at all of that, and then we're looking at the list to sale price ratio, we're at 95.92. And under 250 was at 95.25, which is kind of high for that price range. 250 to 300 was actually at 84.9. So that was quite low. And that's quite a thing right there. When the median price is at 400 though, and we're under 300, then you've got that going on, that you usually have the under 250 hitting that. Then we're at 97.26, 96.6, 96.9. So there's a little bit of room in there. And then 96.16 over a million, which is a little higher than normal and all of that kind of good stuff as well. The days to contract right now is sitting at 79 overall in regards to what's happening there. So when we look at the condos, townhomes, and villas, we've got 139 total. 57 of them were under 250, 20 between 250 and 300, 43 between 3 and 4, 12 between 400 and 500, 7 500 to a million, and none sold over a million. There are 19 in inventory over a million, but none of them sold. The average days to contract there is 90, and they're selling at 95.91, so about the same percentage as the single family homes. However, the under 250 here is at the 93.64, and then all the way across the board is either at 96 or 97, except 400 to 500 was at 94.75. So when it comes down to it, I'm always talking about everything is very local, but this gives us an idea, and we can look at, what's happening overall and everything in seeing what's going on as well. Now, another interesting statistic that I'm able to give you here is the average lease rate of what's going on. Overall, for all the leases, the median price went from 2,000 to 2,120 to 50 for this week, but the homes went from 2,300 to 2,250 for the week. The condos and townhouses went from 1,825 to 1,950. So there were more of those, obviously, that happened. There were 179 condos and townhouses that got leased, and there were 498 280 single family residences. I'm kind of mixed up this morning, sorry. But basically it comes down to when you're looking at that, there are a lot of opportunities out there, but that's kind of what the scoop is. So when you're looking at a single family home and it's $2,250 to rent it, you want to look and see what you can do in regards to possibly finding a property that you could purchase for that amount of money, which at this point is a little bit tough. And that is why we have what they call the affordability gap, because the amount that you can rent for is less than what you could buy for that same property for in today's market. But basically, when you're looking at it, that kind of gives you an idea in regards to what's happening. But if you were renting out a condo or a townhouse and that being $1,800, it might end up being, a good investment for you. So you definitely want to look at that to see what the scoop is and how all that stuff is going to shake down. So in order to get in touch with us, you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com, and we'll be back after the break. Welcome back, everybody. This is Laura Petersen, your host of Central Florida Real Estate Radio. I'm from Your Home Sold, Guaranteed Realty, and to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So I found this interesting article that's going on out there that actually the FTC is taking a closer look at rental housing fees, and they're asking the public to weigh in on whether new rules are needed to address what it described as unclear or misleading pricing practices. So they're seeking comments on fees charged through the rental process from application to move out, and this includes how rents are advertised, how fees are disclosed, and whether certain practices may be unfair or deceptive under federal law. And so basically for housing providers, including property managers, investors, any future rule could affect how rents and fees are advertised and disclosed, particularly in competitive markets where pricing transparency may influence renter decision and leasing activities. Now, personally, I do think that this doesn't necessarily need to be regulated, but I do think that it's something, because I'm not, a big fan of huge regulation, but I do think that things need to be transparent and fair and all of that kind of thing when it comes down to it. And we always try to do that. And then I hear things from people that I go, really, that just doesn't seem always to be the right thing to do. So the proposal is open for public comment until April 15th. And basically, when you go to it, it's under regulations.gov /document /FTC -2026 -0266 -001 comment. So if you want that, please let me know and I'll get it to you, because obviously that was a mouthful. But basically, these are the kind of things that they're looking at, that it's total rent. Do rental housing providers fail to clearly and conspicuously disclose or misrepresent the true total rent for a unit or property, including all mandatory fees and charges? For example, I know that there are certain rentals that people have talked to me about that they say that, hey, if something breaks in the unit, that they're responsible for fixing it. And, I know that in some rental contracts, I know that there's some people that say, hey, I'm going to buy a home warranty, and if something goes wrong, I want the tenant to pay that home warranty deductible of $50 or something like that, or they're responsible for the first $50 of this kind of thing. Now, in certain cases, if the renter or the tenant breaks something, obviously that makes sense that they would pay for it. But if, for example, the AC is going out because it's 15 years old, that doesn't make sense to me that the renter would be the one that would be responsible for that. That's part of what they expect to be working, in the property. And if it's getting older, then that would be the thing. Another thing would be like the hot water heater, for example, or something electrical that goes haywire that's not as a result of anything that the tenant did. And so those are the kind of things that I've heard of that I think that may not be 100% fair for some tenants. And they're like, well, that's what it says in your lease. Well, those kinds of things are the things that are the reasons why these things are being done. And then another one is the fees and charges. Do rental housing providers fail to clearly and conspicuously disclose or misrepresent the nature, purpose, amount, refundability, optionality, and recurrence of fees or charges? And so, in some circumstances, these might be other things. They're of concern to people and everything. And so you just need to know up front in regards to, what those things are and all of that. If there's a specific fee, I can't think of anything necessarily off the top of my head. I mean, I have seen quite a bit right now that there are pet fees if you're going to have a pet, and it's a monthly fee that they have for them. And you might think, well, that's unfair and all of that. And it just depends, honestly, on the pet. I mean, pet deposits, they can be pretty stiff and that kind of thing as well. So say it's $1,000 for a pet deposit. But if that pet does wreck the carpet or the flooring or something like that, it could cost the landlord much more than $1,000 to fix it. If the pet's under control and everything like that, like most of them are, then it doesn't, it's really no skin off of their back to have that pet there or not there. And so it really depends on the pet and the pet owner in regards to whether it's a challenge or not. And so it's kind of hard to regulate that. But, when it comes down to it, other additional fees that they might charge you for that you're not necessarily thinking of when you're going to rent that property. Another big thing is application fees. And this is kind of a pet peeve of mine of what I've seen. And the thing is that when you are putting a tenant into a property, you definitely have to do the credit check, the background check, all of that kind of stuff. You want to make sure that the tenant that you're putting in there, has not been evicted and everything from another property. and if it was that they explained it to you and you're okay with it, well, that's great, but you need to know that up front. And what I have found that if you screen the people up front, that it makes a huge difference into what your situation is going to be on the other side. So you definitely want to make sure that you do that. Now the application fees that, usually what most of them all do is credit, criminal, and eviction. So I think all of that is great. But the challenge is that if you're going into one property and that one doesn't work out, and then you go to the next property and you have to do the application fees all over again, that's where it gets to be a problem. And so basically when it comes to what we do is that I definitely tell people, hey, if you've got something on your credit report, if you've got, something on your, eviction report, or if you've got that kind of thing that happened in the past, just be honest and tell me up front, because it's going to come up when I run the report and I don't want to waste your money. And so if there is a circumstance like that, we'll go ahead and we'll talk to the landlord before we run the credit to see, because I don't want to waste somebody's money if we don't, if that would be the case. Now, there are some services that say, hey, we'll do the credit report and you can use it from place to place. And some places allow that credit report to be used and other places don't. And so that, I think, is one thing that if you are looking at multiple places, that can get really expensive quickly. And they require this for everybody who's in the house that's over 18. So if you've got a couple of kids that are living with you that are over 18, and they have to, go through those checks and everything as well, then say you've got 4 people in the house that are doing that, then obviously at, $100 a pop, which some of them are, then that's $400 every time you apply someplace that you may or may not get. If it's $50, then it's $200, which still is expensive. And most of them are about 60 or 75. So when you're adding all of that up, if there was some kind of a system that you can ensure that you were giving it, that it was a central place that everybody used, which probably will never happen, then basically it would be like one and done and you would be ready to go. And I know, like I said, there are some services that are like, hey, if you go through us and all of that kind of thing, you can all get your credit reports through us, and we'll do it and everything like that. But basically, when it comes down to it, everybody has to feel comfortable and know that they are the official thing. So maybe if that was regulated to the point where everybody used a central service, but then it would probably be more than some services are and everything. So I'm not really sure that would be a big deal either. Next thing on the list to talk about is the security deposit. What practices do rental housing providers engage in relating to security deposits that may harm consumers? So basically, they're supposed to be kept in a Florida bank account is basically what they are, and not commingled with the person's other monies and that kind of thing. And then basically there are rules in regards to when they're supposed to be paid back and all of that, which obviously one of the things that we do is when you move in, we have a checklist that you mark and take pictures and everything of things that you're concerned about when you move in. And then when you move out, we compare that same paper to what the condition of the property is when you moved out. And just for example, there was a property that a lady moved out a couple weeks ago. Well, actually 3 or 4 at the beginning of the month. And, there was a stain in the carpet in the bedroom when she moved in. It had been cleaned, but it was not able to come out. Somebody had used bleach or something on it at some point, and it was a place where the bed went, so it really didn't bother her or anything like that. And so when she moved out, obviously that same stain was there, but she had cleaned the carpets, and so everything was clean. So she got her whole deposit back. But, when you're looking at that kind of stuff, you want to make sure that when you're moving into a place that you've got a record of how everything looked the day that you moved in, even if it's like taking pictures on your phone and time stamping it so that when you're moving out that you can see that. Billing issues. What practices do rental housing providers engage in relating to billing that harm consumers? And that would just, in my opinion, be the little nickel and dime stuff. There's one property manager that I know out there that I've got a friend that rents from them, and basically, what they say, hey, this thing broke, that you would think would be the landlord's thing, and they come back and they say, no, it's your responsibility. And so what they do is, they charge, they charge it. Now, if you knew that was your responsibility, would you necessarily use the person that they use to fix it and everything like that? You don't have any choice in regards to who you are choosing to fix whatever might be broken and everything. And so, obviously using good people, but there are some people that might be more expensive than others that do the same work, and you might have somebody that could do it for a lot cheaper. So I think those kinds of things are the things that are happening there. And then consumer choice. What practices do rental housing providers engage in that harm consumers by impeding consumer choice, which is basically what I was just talking about. So basically, that unclear pricing can make it harder for renters to compare options and budget effectively. And when mandatory fees are not included in advertised rent, consumers may underestimate the true cost of housing, potentially leading to higher overall expenses. And that might just be the requirements that they require for insurance, for example. Certain places require that the tenant has a specific amount of insurance in addition to what that homeowner has. And so if you've, got that, it's not a bad thing to have. But if that's not disclosed up front and this place has it, you weren't planning on getting it, and then you have to add it on, it can be something that you want to look at. So as a landlord, you want to consider all of these things. As a tenant, you obviously want to consider all of these things as well to see what's the best thing for you and your family to figure out. So like I said, they're in this fact-finding thing, but I think that what it's good for all of you and all of us is to actually look at these things ourselves and see how do we want to operate within this realm to make sure that we're being fair, getting the tenants that we want that are going to be good and loyal. And the thing that I have found over the years is that most landlords that I work with anyway, if they get a good tenant, they do not want to raise the rent. I've got one landlord right now that I'm working with that it's a 3-bedroom, 2-bath house with a pool, and it's in Davenport, and it's right by 192 and 27. So it's kind of, it's in kind of the area and everything. But basically what the scoop is on it is that when they started renting it 10 years ago, it was at $1,400. Now that house would go for like $2,400. They are actually renting it still for $1,600. He raised it, but he didn't raise it too much because he's got a good tenant. They pay the rent. They keep the place good and all of that kind of stuff. So it's like he's making as much money as he needs to on the deal. So he's not nickel and diming them. If the AC breaks, he doesn't charge them for it. He goes ahead and fixes it. And so, it's a win-win situation for everybody, but everybody doesn't operate that way. Some people are strictly that they want to be making money and all of that kind of stuff. There's another property that I sold in Winter Garden. Same situation, that the people had been there for 10 years and they were about $1,000 underneath what the rent was. And the landlord said, hey, I really like this tenant. They've been really good to me. It's been a really good situation and all of that kind of thing. And they don't cause any trouble. They pay the rent on time. They keep the place nice. And so they want to do that. So that's a lesson maybe to some of you renters out there too, that if you do have a good a landlord like that they appreciate you, that they're going to go ahead and go that extra mile, for you, just like you are for them. And so it's a win-win situation, which that's what I like in life, the win-win situations. But in order to get in touch with us, you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com, and we'll see you after the break. Welcome back, everybody. This is Laura Petersen, your host of Central Florida Real Estate Radio. I'm from Your Home Sold, Guaranteed Realty, and to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So I found another interesting article out there that really will make a difference for a lot of people, and that is that Fannie Mae is set to allow certain crypto holdings to be used as collateral for down payments, giving buyers with digital assets more flexibility. Now, in the past, there are very few crypto things that have been used at all in the housing market. Anybody that has bought a house with crypto with the title company that is no longer in existence but used to do it, what they would do is they only had a certain types of crypto, I think 2 or 3 of them, and they would actually transfer those cryptocurrencies into cash, and then you would purchase the property actually for cash instead of with crypto. Now, this is a completely different thing. The only crypto ones that are being considered right now are Bitcoin and USDC. Those are the only 2 ones that are being allowed. But this is really interesting to me in regards to what they're going to be doing. It's that the crypto-backed mortgage sometime in the next 3 months is going to be basically rolled out. And it's a partnership with the crypto trading platform Coinbase, is basically what it was. So what what they're doing is that you can use the cryptocurrency for buying a home, but it's like putting the down payment in your crypto. So basically the way that this is going to work is that you're not going to be required to sell your crypto investments to fund your down payment. Instead, the borrowers who qualify for the mortgage would only have to pledge such holdings and transfer them to Coinbase as collateral for their down payment. So that's basically what it happens. So that allows the crypto investor to not have to lose out on potential future gains of the value of their crypto the way they would if they sold their holdings for cash. So if it drops in value, the mortgage terms remain unchanged and no additional collateral is required. However, if you're at risk of liquidations if you fail to make your mortgage payments for 60 days. So basically, like I said, it's Bitcoin and USDC are the ones that can be used. And the mortgage is designed in accordance with the Fannie Mae guidelines. And so basically it's backed by them. And so basically that's kind of what the scoop is. So you can use your crypto in the future, and it's going to be rolled out in the next 3 months. It's not yet, but basically what's going to be happening with that is that you'll be able to use your down payment, put it into a Coinbase collateral account. So obviously you won't be able to sell it or do anything else with it, but you'll be able to get the gains. And if there's a loss, you're not going to have to change your mortgage or anything like that. But if you do go 60 days behind in your mortgage payment, then obviously that could be a problem. So I think that is very interesting in regards to where we're going in the future with crypto and all of these kind of things that are out there. But they do go with the ones that are the most stable and all of that in regards to what's going on out there and all of that, so like right now there's billions, well, I don't know billions, but there's a lot of cryptocurrency out there, but the only 2 that are considered, like I said, are Bitcoin and USDC. So basically makes it so that it's a win-win. So it might be worth it if you have enough crypto that you thought you would buy the house, that you would actually get a mortgage instead and just use your crypto for your down payment. You still keep the ability for it to grow and everything with that, and don't have to sell it. So that would be a huge thing for people. And if you didn't have to sell the whole thing, then that would be a big thing for you to actually consider. So something to know in the future is that we're constantly evolving. Last week I talked about AI and, what AI is doing to help, sell your house. And now here we are with crypto. So things are changing in this world, that's for sure. And some of them are good, some of them are bad. I'm not saying any of this stuff is bad at all, but I think that it gives people more options. It allows you to continue with your investment and everything. And like I said, these cryptos are probably of the most stable ones that are out there. So in order to get in touch with us, you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com, and we'll see you after the break. Welcome back, everybody. This is Laura Petersen, your host of Central Florida Real Estate Radio. I'm from Your Home Sold, Guaranteed Realty, and to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So I was looking around, and one of the things that I saw, and that is always something of a concern, people when they're getting ready to sell their house, they go, well, when should I actually contact you? What should we do? All of those kinds of things. And basically the bottom line is that early planning always helps you align timing with market demand, make smart updates, and avoid rush pricing decisions and all of that kind of thing. When people are considering a move, the best thing that I think they could do is reach out to someone like myself. I'm more than happy to meet with you and basically, come up with a timeline, come up with basically what you need to do and all of that kind of good stuff. And the thing that I find most with sellers is that for the most part, there's some sellers that are right on top of it, that if we go and we meet and we discuss, hey, XYZ would be good to be done. And then that's going to make a huge difference in the sale of your house. And then there's other sellers that you meet with and you say XYZ and they're like, yeah, we're going to do it. And then they never get to it. And so I think that it's like you have to be realistic in regards to where you are on that fence. Does it make sense for you to do all those updates, or is it something that you'd like to hire those updates done, or is it something that you would like to, just go ahead and have, sell it as is and be done with it? I was talking to an agent the other day, and, he said that he had this listing coming up and everything, and he's actually in Houston. And he said that basically that the property had quite a bit of damage to be done with it. There was an insurance claim on it. They actually collected the claim, and they were going to be fixing it up and everything. And it had been quite some time. And so he said it's going to be coming on board for 3 or 4 months. And so in 3 or 4 months or 6 months or something like that for it to come on board. And I said to him, I said, well, I said, would it make more sense for the seller to sell it today in the condition that it's in, and they've got that money from the insurance company that they can walk away with at this point in time, so it would make up the difference from what the property is going to sell for and what, the repairs are, which it's the floor is basically what it was. It was a water leak that a pipe broke. And this is an investment property. So they're not living in the property. So they're not making income on the property right now. They do want to make income. And so, basically he said, well, it would be doing a disservice to my customer if they would put it on the market now at a lower price and sell it quickly, as opposed to fixing it all up, taking several months to do that, and then, putting it on the market then. I said, well, I told him, I said, I think personally that your best service to give to them is to ask them what they would prefer. Give them these options in regards to what they can do, and then they can decide what is the best thing for them to do. It's never up for me to decide what's best for you to do. You have your own set of circumstances and your own things that you have going on. And so you know that. So it's like my job is to come in there with options to let you know what your possibilities are. And then you can choose what you want to do. Do you want to get a cash sale on that property right now? Move on right now. You're not making any money on it at the moment. And so somebody could come in there, fix it up, and sell it, and maybe they would make an extra 10 or 20,000. But if you go in there right now and you take 4 or 5 months to get it done, and you're doing it yourself and all of those kinds of things, or hiring people, and then it's over what you thought it was going to be, it takes longer than you thought it was going to take, and everything like that, it's going to be a harder property to and then you're going to put it on the market and wait, several days or months for that property to sell, depending on how you price it and what's going on in the market. Like, for example, in our market here in Central Florida, if you were to sell, if you would have that property that was priced well below market and everything like that, and it needed the work, you're going to get people that come in that definitely, even if they get a loan, they can get a 203K loan from FHA that would allow them to fix it up after they purchase it, but they would be getting a house that would maybe be something that they could afford, that they couldn't afford it otherwise. And like I was talking a little bit earlier about affordability. And so when it comes down to it, you definitely want to make sure that you've got it. Like, I've got a buyer right now that she wants a specific property. And she's just, it's her and her husband that are getting it. His credit isn't exactly the best. And so as a result of that, she's putting the property mortgage in her name, not both of their names. So it's based 100% on the money that she gets, not on any of the money that he's earning. So they're going to be way under what they need to be in order to, to live the lifestyle that they want to. But she's looking for a loan that's about $200,000, and she has a couple $100,000 that she can throw in with selling her house. And so $400,000 is about what she wants, but she would really like to get a house for $3. So when she sends me houses that are for $3, a lot of them need work, but they're very appealing to her, and she's not afraid of work. So it's something that she could do, that she could buy a house maybe at $250 or $300, and then put, like maybe $50,000 or $100 into it, and have a house that was, better for her and her family than what she's got right now, and have everything that she wants. And we were looking at a house that needed a roof. And if it had a roof, if the new roof had been put on, the property would have been sold for about $40,000 more. But because it needed a roof, she was like, hey, I'll take it that way, because I can maybe get by another couple months, and then I'm going to have that $40,000 that I know I'll come up with it to put on the roof. And so everybody's different, in regards to that. So is it telling the seller the traditional way of having your house in perfect condition and all of that is what you want to do? I mean, like I said, these people, they're an investor, so they're not making any money, and haven't been for a while, since the property had its challenges because the tenant moved out. It's got a damaged floor, and so they have to, replace it and everything like that. And it's probably already been 6 months to a year that they've gone without income on that property. And so when it comes down to it, you've got to look at the whole situation. But we have companies that'll come in that would do that for a seller, and manage the project and all of that kind of thing, so you don't have to. So that's one thing. And then they would get paid at closing. So there's those kinds of things that can happen. And basically, there's cash offer people that will come in and buy your home, and basically fix it up after you've sold it to them, and then put it on the market at that point in time. But our market right now, what people are looking for in more than anything else is a deal. And so if they can come in there and get a deal, and they might have a little bit of repairs and that kind of stuff, you're better off pricing it lower in this market, in my opinion, and getting the best deal for it. So my point is that whatever your situation is, it's like, let's talk about it. Let's talk about your timelines. Let's figure out what's going to work and then make it happen in the way that's going to be best for you and your family and your situation. And that's what it's all about. It's not about, me saying, hey, get everything perfect and then you're going to get more money, because basically there's houses that are sitting on the market right now because that seller wants more money. So let's talk about it, figure it out, and make it happen. So anyway, I'm out of time. So in order to get in touch with us, you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com, and we'll see you next week. Have a great one. Bye-bye.